Right. All right. Today, Tesla announced their Q4 2020 earnings, and I want to go ahead and take some time to give my thoughts on the shareholder letter. If you can just go ahead and in the comments let me know that you can hear me, okay? I'd appreciate that. All right, so Tesla in after hours market trading, it's up $66 to $647, up about 11.5%. On a pure numbers basis, I don't know if Tesla has ever been up $66 after hours in a after earnings call. So this is actually a special time. Tesla has broken all-time highs. People are excited, and I will give some thoughts. So here is the shareholder letter. I'm going to share my thoughts on the first half of it all the way to the guidance. The earnings call is going to be in about 35 or 40 minutes. And so what I'm going to be doing for the earnings call is I'm going to stream the earnings call live as well. And so you'll have a chance to kind of join in the chat, and I'll go ahead and have an extra screen on where I'm going to chat and share my thoughts as we hear the conference call. But I'm not going to share any audio during the conference call, so you can listen to it straight live. And so that should be a fun experience. So tune back to my channel at 3:30 p.m. Pacific time for the conference call. All right, so here's Tesla's earnings summary, and you could see that they had a great cash increase and a great operating cash flow. So they basically had about $1 billion operating cash flow, and they added $930 million to the cash balance to $6.3 billion, very healthy. Profitability, the important number is $105 million GAAP net income and $386 non-GAAP. If you saw my range that I had estimated before, I was hoping between a $150 and $400 million GAAP income. So this is a bit lower than my range. And so in this earnings, I'm asking kind of what's going on here. Why was it lower? Was it a one-time thing or ongoing thing? And what are the ramifications for that? For Model Y production ramp, it started in January 2020 ahead of schedule. Now, this is actually very surprising. I think this was probably the biggest news of the entire shareholder letter, that they secretly started the production ramp already in this month. And it looks like, and they actually share this, that they're going to have deliveries by the end of Q1. So awesome, amazing news. The EPA range for Model Y all-wheel drive expands to 315 miles. This is another awesome piece of news because I'm looking to get a Model Y all-wheel drive myself. And so that's fantastic, over 300 miles. Record deliveries, they had already announced 112,000 deliveries. And energy storage and solar is increasing as well. If you look at this financial summary statement, so this revenue, the automotive revenues is coming in between what I expected, between $6 billion and $6.4 billion. Their gross margin is a little bit lower, and I would have expected it to be a little bit higher since they had delivered so many extra cars. So that is a little bit of concern, but to outweigh that, the jump between gross margin in Q2 and Q3 was quite high. And so, yeah, it could be just going back to kind of, a more of a normal increase. In terms of GAAP gross margin, that's fine. It's because the gross margin is a little bit lower. Operating expenses now kind of surprised me. It was $100 million higher than the previous quarter. And so it's kind of surprising because it's almost going back to their previous level of operating expenses, like in Q4, Q1 of last year. And so I was expecting something around 950, 960. So that's a little bit higher. I'm going to be asking the question, like, what's going on with operating expenses? What can we see operating expenses be going forward? Lastly, they had a net income of $105 million. and it was a bit lower than my $150 million GAAP net income, and I'm asking the question why. I already look at their I looked at their financial statement a little bit further in the back, and they did have some one-time expenses. Last quarter, they actually had a one-time kind of income of about 80 something million, and this quarter they had a one-time expense of about 20 something million. So that was about 100 million, sway there. And there could be some other one-time items that kind of swayed the income to be a little bit less than Q3. Again, cash flow was fantastic. So here is their financial summary, and which doesn't tell that much, I think. Their operational summary, which we already knew about their deliveries already, and they talk about vehicle capacity. Now, here is where I do have some concerns, and they are saying that Model 3 and Model Y combined capacity is about 400,000 units per year. Now, if you look at in Q4 of 2019, they produced 87,000 Model 3s. Times that by 4, and you've got, 345,000, a little bit over that, 345,000 capacity that they already exhibited last quarter with Model 3 production. So here they're saying that they're going to have a 400,000 unit capacity with Model 3 and Model Y. So I'm like, what's going on? That's only a 55,000 extra capacity for Model Y. And that doesn't really look like, much right there. I wonder if they're going to be shifting some of the Model 3 production to Model Y. And that's, a question. And then they're saying by mid-2020 that the Model 3 and Model Y capacity should reach 500,000 units per year. And so they're saying that the ramp will be gradual. So if anyone's expecting kind of a fast ramp for Model Y, don't expect that. This is going to be a slow ramp. They already demonstrated, capacity of 345,000 Model 3s at an annual run rate, basically last quarter. And so, for them to go up to 400,000, that's barely, increasing the production rate. And hopefully to go to 500,000, that's about 155,000 more units than what they're demonstrating right now. And so it's a modest increase of production capacity. I would have hoped, for a bigger jump with Model Y production for this year and for the capacity in Fremont. In Shanghai, they're ramping local production of battery packs, and that's good news. And again, in Shanghai, they're going to be doing this long process of localizing their supply chain, and that should improve their margins and allow them to decrease their costs. Lastly, in Gigafactory Berlin, you see the first deliveries from the factory are expected in 2021. So that means they need to really, break ground soon, and they need to, finish the factory within a year and a half in order to get delivery started by the end of 2021. You have some autopilot vehicle software and battery train updates, and energy and solar roof. Now here's the outlook that Tesla's given. They're saying that they should comfortably exceed 500,000 units. Now, I have a few thoughts on this. First, I'm glad that Tesla is actually forecasting lower estimates than many of us Tesla shareholders would have expected. I was hoping Tesla was going to announce 550 to 600,000 deliveries in 2020. But for them to say 500,000 or in excess of 500,000, I think first that's good news, because Tesla can then, with those lower expectations, can either boost their guidance later or just comfortably exceed that guidance, and that's good news. You're setting the bar lower so you can have a much better and easier chance to succeed in exceeding that guidance. The flip side of that is that this could actually be somewhat of a concern, because theoretically, you already have Model 3 at a 350,000, annual run rate in just Fremont. And if you add China to the mix, that's 100,000 or 150,000, they're saying, right? That's already, 500,000 annual run rate for Model 3. I'm not saying that, they're going to be able to do that this year because China needs to ramp up to that, 3,000 production rate per week rate. But for them to, say this year we're going to deliver, just 500,000 units when their Model 3 capacity really is approaching 500,000 units, it does seem kind of low because this year is supposed to be the year of the Model Y, where they're supposed to not just release it, but ramp up production of Model Y. And so it does seem a bit low. And so there is some concern that perhaps they are being a bit conservative with Model Y production ramp, and perhaps we're not going to see the volume of Model Y deliveries that we might have expected out of Fremont. So, if you were expecting 150 or 200,000 Model Ys this year, maybe, that's actually unrealistic if, Tesla is doing a very slow ramp of the Model Y. And so my expectations now are maybe you're looking at, less than 2,000 deliveries in Q1, maybe less than 1,000 maybe. Maybe Tesla will go very slow in Q1 with Model Y. And in Q2, they'll ramp that up and maybe they'll deliver 5,000 to 10,000 vehicles. And in Q3 and Q4, maybe combined, you're looking at something, hopefully in excess of 50,000, if not maybe 50 to 100,000 total. And so, maybe Model Y deliveries ends up to be about 100,000 in 2020. And what this does is it actually pushes off the year of the Model Y to really 2021, meaning 2020 becomes more of the year of preparing for this Model Y and starting production of the Model Y. But 2021 then turns into the year where Model Y really ramps up and can sell, perhaps a good 300, 400, or even 500,000 units in 2021 if production capacity allows. Now, this is the big question and the big takeaway I'm taking from this shareholder letter, which is basically production capacity, right? Where is this production capacity going to happen? In Shanghai, they're saying that, actually, here's the Shanghai. They're saying Model 3 production in Shanghai is continuing to ramp while Model Y production in Shanghai will begin in 2021. Okay, so we know a few things here. First, we're not going to see Model Y in Shanghai in 2020 this year. So Tesla is pushing that to next year in 2021 that we're going to see some Model Y production. And so even if we see, 150,000 or they might do a 250,000, annual capacity for 2021, but the actual deliveries might be lower than that. So, and then the question is with Fremont, if Model Y demand really is greater than Model 3, which I think is obvious that it is, how is Tesla gonna satisfy the Model Y demand of, out of Fremont? If Fremont is already producing 350,000, run rate Model 3s, how are they ever going to produce, not ever, but how are they and when are they going to be producing at least that much out of Fremont? Another question is there another U.S. factory going at hand, or are they going to be expanding Gigafactory Reno to include Model Y production as well, and Cybertruck and Tesla Semi? Those are some different questions, I'd be asking in the conference call and going forward as well. All right, so for cash flow and profitability, here we have their, expecting positive cash flow, and that's, pretty obvious. In terms of cash flow, one of the things that Tesla has going for it, it's got a lot of depreciation and amortization, meaning they have been making capital expenditures or investments in previous years with factories and equipment and all that. And as they start to make cars, they have to depreciate and amortize that equipment. And that doesn't show up in their income statement, but it actually shows up Actually, it shows up as a cost of revenue in their income statement. So it actually hurts their income statement, but it's not really money that's going out that quarter because they had already spent it in previous quarters. And so it comes back to them and it shows up actually as cash flow on their balance sheet. And that's why Tesla has great cash flows, because they've already made those investments in previous quarters. And another bullish sign is Tesla is learning to deploy their capital much more efficiently to create these factories with much less capital. And so that's another good sign going forward. In terms of profitability, they expect GAAP net income going forward, with some exceptions, particularly around the launch and ramp of new products. And so, this doesn't really tell me too much. My thing I'm looking for Q1. Are they going to guide for profit or not? And it looks like they made it very general that they're saying that we guide for profit going forward, but with exceptions around the launch and ramp of new products. And like, how many ramps and launches of new products are they going to have? It's like almost continuous. Like, even with the Model Y, you could say the launch and ramp of the Model Y will be Q1 and Q2. Who knows? Maybe the ramp goes into Q3. And so it's kind of like ambiguous in terms of the guidance they're really giving in terms of net income. So what this tells me is, it tells me that Q1 of 2020 is a bit unclear in terms of Tesla's stance of whether or not they're going to be able to run a GAAP net income profit. So why is that important, or why do I even care? Let's look at a few more slides from this shareholder letter here. Okay, we got some financial statements. I'm going to try to zoom in here a bit. So here you have Tesla's income statements, and here you have the important thing for the S&P 500 inclusion is this net income on a GAAP basis, which was 143 million last quarter and 105 million this quarter. Tesla needs a combined $265 million in net income for Q4 and Q1 of next year in order to be eligible for S&P 500 inclusion. So in Q1 of 2020, if Tesla can report 155 million, or basically $156 million in profit. So that's now the magic number now. In Q1, $156 million. If they can report that as net income on a GAAP basis, then Tesla will be eligible for the S&P 500. And because they're such a large cap, market cap company, I think that they will be accepted into the S&P 500 quite quickly after that. So the question is, can Tesla, really do that? And here's the scenario: if Tesla can have a profitable quarter in Q1, it really gives the bears like nowhere to go, because, especially if they can, produce a surprise $156 million profit, then S&P inclusion will be imminent, and the bears will be kind of trapped because there's like nowhere to go, and there's all these index funds that need to purchase Tesla. But if Tesla delivers, let's say, a negative net income or a loss for Q1 of next year, then it kind of does give a little bit of room for the bears and skeptics to come in and say, there, see you go, Tesla is not profitable, or their future is unclear and unsure, even though that's like, just, completely, I think, just out of not realistic, because Tesla is, they're ramping, their Model Y and new products, and their profitability will increase with those new products. But I'm just saying, in the short term, in the next several months, Q1 seems to be an important quarter, and it's going to be interesting. My question is, maybe did Tesla kind of hold back on certain one-time income, one-time maybe credits or etc. in this quarter, so that next quarter they can surprise for a profit in Q1. I mean, that's my hope, but all of this is unknown, of course, until we can find out Q1 earnings. And so it's going to be interesting. If I was on the conference call, I'd be asking Elon Musk, hey, what's your outlook for Q1 2020? Do you see a profit or not? And that would tell us, kind of some indication of what they're thinking at this point, because it's already 1 month in to Q1. All right, guys. So we're going to go ahead and I'll go ahead and take a few questions regarding this Q1 shareholder letter. And there were some people on this chat thread that were saying that I sold all my Tesla shares. That's completely ridiculous, man. This is like completely chaos on some of these chat threads. Anyways, I'm telling you guys, I already told you guys, watch my Tesla exit plan video. The key point is, my strategy is, if you catch a company that has a clear and probable path to a 10x valuation in 5 to 10 years, which I do believe Tesla has, you hold on to that company as long as you're executing toward that goal. And I think this overall, I'll take a look at this shareholder from two perspectives. One is from a long-term perspective. Yeah, I think Tesla is showing that they are continuing to execute. They're entering into new markets, progressing on Gigafactory Shanghai, on Berlin, pushing the Model Y production, and all of these things long term, it's great. And so from a long-term shareholder's perspective, nothing changes with Tesla's long-term story. It's great, and whether Tesla really had $100 million profit or $300 million profit for this quarter, it really doesn't matter long term, because they're just in the beginning. They're in the bottom of the second inning, maybe, or middle of the second inning, I think, for Tesla. And so as a long-term shareholder, I look at this quarter as very positive, and 2020 is looking to be a positive year. I think the Q1 though earnings tends to be showing some vulnerability in terms of whether or not they're going to be able to show a net profit. But that said, as a long-term shareholder, I'm very satisfied with this quarterly earnings. Now, that said, as more of a short term to medium term, so over the next few months to next 6 to 9 months, what this shareholder letter shows me is, it shows first, production capacity is somewhat limited in terms of Model Y ramp, and Tesla's going to have perhaps a slower Model Y ramp than I personally expected. And it shows that Tesla has slightly higher operating expenses than I'd hoped for. And so it just shows that over the next quarter or two, we might not see huge kind of profits coming out from Tesla. And so it does kind of give me some have some questions for the next maybe 3 to 6 months. That said, though, there's a lot of stuff positive about Tesla, where because there's been such a negative slant on Tesla in the media, just to have Tesla go quarter by quarter and just become more mature, and just to go and to have more cash flow, and to have a better cash balance and a higher stock price. All of this, I think, helps the Tesla story overall. And as long as Tesla just executes quarter by quarter, all that is bullish. As long as Tesla executes, that's like less room for the shorts to have a credible story. And so, yeah, overall, it's very exciting to see what Tesla is doing. I'm going to be live streaming this conference call just in about 10 or 15 minutes. And what I'm going to be doing is I'll live stream the audio, so you guys don't have to, you can just, listen to the audio straight. And I'll go ahead and be typing my comments, and you guys can join in the chat section to kind of share your thoughts and your ideas for what's going on here. All right. That's great, man. The best message so far has been from Wilhelm Kazimorovici, and I'm gonna try to add this to the stream here. Yeah, actually, it's not working, but he's saying, Dave, don't close this connection. All right, guys. Anyways, I gotta close this connection because I've got to prepare for the audio call, conference call, and so looking forward to that. I'm also looking, forward to having some more of these sessions where we could go kind of more in depth. If you haven't listened to my yesterday's live stream, it was about an hour and a half, and we had a good time answering and discussing a bunch of topics from coronavirus to Rivian to competition to robotaxis. And there was actually some interesting stuff in that call. So if you have time, go ahead and listen and watch that yesterday's call. And lastly, I want to kind of share an idea just to plant the seed with you guys. And the idea is I'm looking to have a physical gathering post earnings call for those who are in Southern California. The gathering might be limited just to less than 10 people. And the purpose of the gathering would just be to gather on a weekend day, maybe Saturday or Sunday, maybe this weekend, we'll see. And to spend a few hours kind of sharing our thoughts on Tesla, trying to go a little bit deeper than just the shallow media and the shallow coverage that people have regarding Tesla as a company, and try to really examine where Tesla is and to see how this earnings, affects that. And so it might be a 2 or 3 hour meeting, limited to maybe 5 or 10 people in Southern California. We'll go ahead and record the entire meeting and episodes so other people can benefit from the discussion. But I just wanted to go ahead and share that idea with you guys. So if any of you guys are in Southern California, you can start thinking about it going forward. All right, guys, we'll see you guys in the conference call and see you guys in future videos. Thanks.